think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, we are back with Fabi, the uranium expert. What's going on?
Hey Daryl, how are you? Nice to be here.
I'm doing pretty good. I took advantage of the dip in some of the larger cap uranium
Good for
equities.
you.
So I was in Cameco. I've told the story multiple times. I used to be in Cameco at
hmm
like $12, and then I sold it when it hit a little over 20. And
hmm
didn't have. I mean, I had a high conviction, but I didn't like understand. The knowledge wasn't really there. So then,
Yeah.
you see Cameco at $55. It's like, oh well, yeah, I'm not buying back in there since I've been, in there at 20. And so then I saw that recent dip down to 35. It was looking very attractive. So
And you bought back into Cameco?
yes,
Nice, nice. Good job. Well, I'm saying good job, hoping that you're gonna make money. I don't know that you will, but I think you will. So
I'm up
that's
so far,
my
but
best guess.
I don't plan on selling no time soon. I'm up so far though.
Good, good. So yeah, I wish I had the cash, just previous to hitting record here. Um, we were joking around about buying the dip and stuff like that. And one of my biggest flaws as an investor overall in these markets is that I do not sit on cash. It just doesn't happen because there's so many different ideas being, promoted, and there's so many different things that I find that it's very rare that there's just any money available for me to act whenever prices do get better. And so I'm holding on to the stuff that I have. I might shuffle some cards here and there, but also, my business model, it makes it so that I hold on to stock quite a bit longer than I guess most people. Because when I take a marketing client on as a company, I don't just hold the stock for the duration of the contract. That's like the bare minimum. But then I want to see it through, because the whole reason why I've promoted it in the first place is because I believe in the team, I believe in the project long term. And so I end up, with having a lot of my cash tied up into the companies that I'm promoting. And that is highly dependent on what they're doing, what the market is doing, and when, the promotion started. And so sometimes I'm like, I really believe in this company and I'm holding on to it. And, price isn't doing so great, or the price is doing really great. But either way, I'm not going to sell now. I'm going to hold on. And that just means, no cash available most of the time. So if people are out there right now, they have some cash available, they're looking at miners, man, there are some deals to be had. I really do believe so. Not just in the uranium space, like if you take a look at gold, silver, even copper, I think you could almost just, go for an ETF and just forget about it.
Yeah, yeah. I ended up getting back into URNM recently with the recent price drop too. Because like sometimes like I have some specific companies that I really like. Denison, Next Gen, and I interview some of these companies when I'm like at the symposium, Rick Rule Symposium, or the New Orleans Investment Conference and such. And but it's like it's one of those things where it's like I'm so bullish on the sector, but I don't have the time to keep up with like a lot of projects and
Yeah.
what's new and everything,
Mhm.
like so it's kind of like, okay, I want to be an alpha investor, but I'm just like, yeah, I can also get this ETF and do well with that too.
Sometimes that works better because the ETF balances itself to track the story if they're managing it well, so that you don't have to do the thinking of, shedding, companies that aren't performing, et cetera, et cetera. I guess what you might miss out is the stories where the price is getting worse, but the opportunity is getting bigger. Um, Also risk to reward plays a big part here, right? And so like we've been talking about Niger for the last, I don't know, year and a half, and however long, the coup has been happening. So, one massive, I guess, punch in the face, for lack of a better word, that investors received was that Global Atomic took a deep dive, and then people had hope that something would happen, and then it drifted back again, and now they're in this weird situation where operationally the local government seems to be quite okay with their project. Boots on the ground, the ramp is literally built, the mine is closer and closer to getting ready, but obviously in order to cross that line they need more financing. And so locally it's all good to go, but they depend on foreign money, on investors that would rather not invest in a West African country with an ongoing coup for obvious reasons. There is no financial security that the asset is gonna be there available for profit in the near future, in the eyes of a normal banker, a sane banking person. And so that's where the opportunity could be. We could be sitting and looking at Global Atomic 3-5 years from now and talking about how it went bankrupt or how it went 10 times from here. And there isn't much in between. It's probably either one or the other. It could be taken over by the government. There could be an outright, war locally. Or they could find, they could pull something out of a hat and find, decent financing and actually export uranium and just make out like bandits in this market, getting the timing really right as we're entering a period of possibly, lots of excitement in the space. So, it's down to the investor to look at the risk reward and say, okay, it's not just about the story that you want to tell your grandchildren because you can't control what's going to happen to the stock in this case, but it's more about what can I take as an investor? What kind of risk am I willing to take? And is there a good entry price? I mean, when I look at this chart, I'm thinking that in order to get something cheaper than this, you would have had to go back, quite a number of years. Obviously, whenever you look at a chart, for mining companies in general, we have to take into consideration that they've raised money during that time. And so a lot of these charts, I don't think any of these charts are ever corrected for that. They're not market cap charts, they're just price charts. And so sometimes they reflect a larger market cap, but the price doesn't always move in that direction. So I take a look at Global Atomic and say, for the risk, this is something interesting here. It's an interesting story. There's also GoviX in the same country. So GoviX, I'm not sure how familiar you are with their story, but similar, well, not really similar story to Global Atomic. So let me backtrack a little bit. So GoviX.
Really quick, before we go over there, I love the ticker, but I was just looking at I've been getting into technical levels and stuff like that. It's really hard with commodities, to trade technical. So mostly when I'm doing any type of trading with like commodity stocks or uranium stocks, I would probably buy shares and then sell it when they get higher if I'm doing any type of trading, versus like call options and stuff. But so anything options related, I'm mostly like S&P 500 type companies. Where it's like, okay, these are huge, huge market caps. And so when I'm looking at this, obviously, we had this support here, and then we touched the support here and had a huge bounce. I mean, I would have probably sold at around this level here, but if you would have held, you could have turned, $1.30-something to close to $4, depending on when you sold within this range here. But now we're back at this level again, and you're seeing a pop above it. Does that matter in these types of companies, technicals, or is this purely like fundamentals related? I mean, it could be a mixture of both.
It's usually a mixture of both. It depends on who you are as an investor or speculator. I know of a guy that is a really good trader and he trades mining stocks, and he actually makes, from just following his buys and sells on X.com or Twitter, I can tell that he makes good money. But I would not be able to do this because, going back to how to make decisions, my psychology isn't set up for short-term trading. And so my thinking is, I don't know, maybe it's because I'm a woman. When I see something on sale, to me, it becomes very, very attractive. When I see something going down, I'm like, let's buy that. The problem is if you then ignore both the technical analysis and the fundamental thesis to the story, then you might end up a company that's going bankrupt, right? And so to me, something that is cheap is automatically attractive, even though it may not be. And then I have to, try to understand the company and try to understand why it's cheap. So yeah, I would advise caution in basing too much technical analysis on mining stocks because of the different market cap. So we're talking about, a market cap today that was completely different 3 years ago or 6 years ago or whatever your time frame is, because every time that these companies need to do anything, they need to go and raise money. With Global Atomic, they've had the benefit of, having cash flow from a JV zinc operation in Turkey, but that is rare. The normal mining companies, they have to go and raise money out in the market through private placements or other offerings. And then, they print out shares, just like inflation in the real world. They print out shares, and then you see the price slide naturally because there's more of them. So then sometimes it's almost a given that, a certain company is going to come down in price because of the share issuance. And so if you're a good trader and it's liquid enough, you can trade around that as well. Knowing when, these free trading shares are going to be available in the market, and you can short accordingly, which is not a game I'm interested in because I'm not mentally sane or insane enough to short anything, especially in mining. And then you can trade the ups and downs of the, I guess, the financing cycle of each company. So it's a decent. I'm looking at the chart. I'm seeing exactly the same patterns as you are, and I'm saying that they've tested a floor there that seems to be pretty solid. Now, can they break through? Time will tell. But then again, if something else happens to Niger, will people care about what the chart looks like? In this case, I'd say most likely not.
Yeah, charts don't matter when you got these macro factors that kick in.
Well, when you get a few guys with guns going into a government building, the charts do not matter that much.
Yeah, yeah. And so, when I'm looking at a company like this, oftentimes when we see these huge drops, so obviously you had a huge sell off here, like multiple weeks in a row. And then it chops sideways for multiple weeks, and then you got a bounce. So like I always look at like, okay, when stocks are usually in the uptrend and you do see a sell off, like you normally get a bounce, and so whether even here, like you get a big sell off and then you get a bounce upwards. Here, obviously, I think this is where the coup news came in. I mean, this huge red candle here. And then it hit this area here of support, and then it bounces up. So sometimes, like I'm looking at it from terms of not necessarily a fundamentals or looking at balance sheets or valuation perspective. It's like more of like, okay, people are likely to buy this because it's hitting this level and it's looking cheap. But obviously, with commodities, it's a lot different because I had shared with a friend of mine this chart here with Nike, and I had brought this chart up on a recent interview with them. But Nike had a big sell-off, and I told his audience, because he had interviewed me, I said, "Hey, I'm buying Nike. I'm expecting a bounce to a specific level or a range." And then, sure enough, Nike's chopping sideways. Even after the carry trade happened, I mean, Nike didn't even really sell off. It actually went up during the carry trade because it was already beaten up so bad. And then I had got out of it before, but I was expecting a bounce. Sometimes it's just like the timing of it. Like it could take weeks, it could take days, whatever, right? And you're just like, I'm not gonna sit in this trade forever. And then, sure enough, after I get out of it, you get the bounce upward. So,
I was waiting for the punchline for you to say, and then it went up, and I made a bunch of money. Like, come on.
I was impatient. I was very impatient, and so normally, like when we see those big price drops, you can find, you can get a short term trade in there. This isn't like an investment; it's like a trade, and that's why I think what's becoming more clear to me is like the difference between trading and investing. And so so you mentioned Goviac, right? What's the ticker for them?
Yeah, Goviac is I think GXU in Canada. There you go. So Goviac, on the other hand, did not bounce back nearly as well as Global Atomic because they weren't nearly as advanced in their development process. So they were still in the financing stage in order to start construction. Global Atomic has, a lot of their mine, already figured out. And so because of that, they really took it on the chin. And then they just slid. Sometimes there's, rumors that, the local government is pro uranium, is not going to give them any issues, etc. And then what happened is they pulled their permits actually because they claimed, you've been sitting on these permits for this long and you haven't been able to produce uranium for obvious reasons, but we're not going to get into that. It's just market conditions. And so we're gonna pull your licenses and permitting. So for them, like that really hurt, and that happened this year. And the stock was already, it's been, I mean, just look at the chart, it's been decimated. We're talking about a stock that was trading as high as 59 cents, 58 cents in 2021 at the high, 59 cents. It's now trading at 4.5 cents. Like this is, wow, this is just mind-boggling. And the thing with these guys is not only is management really good, despite the poor timing of the financings and just, difficult things locally, but they have a really interesting uranium project in Zambia, right? So completely different country, different jurisdiction. They've had that. And they're actually pivoting to, focus on the Zambia project. And so then you kind of have to work through all the shares that are being sold by, the people who bought into the Niger story that just want to sell because they know that that's very unlikely to happen, because, I mean, they don't have the permits anymore. So if they ever get them again, we're talking years and probably a different government and just completely, nightmare of a case. But this is like a brand new company with, tired shareholders that probably want to get rid of their shares. And so if you take a fresh look at them as a company with a Zambia asset and maybe a call option to Niger, if it ever goes back to being, a semi-democratic country, if it's ever been, I'm not sure, then you might find out that it might be cheap. But that's the opportunity because you are dealing with shareholders that bought in when the story was completely different and now they want to get out. And that's why, the stock is suffering so much price-wise. So yeah, I don't think that the management team here is the type that's just gonna let's this thing go. I think they're quite resourceful. I know, some of the people on the board and the management. I really do trust them in the sense that I think they're going to make something out of this. I think that there is opportunity here, maybe where people aren't really seeing. And yeah, and I don't know what the chart says to me, because to me it's just like pain after pain after pain, just
It's
like,
hurt my
you
eyes
know,
looking at it. Yeah,
it's
it's
probably a
hurt.
sell.
It's hurting my eyes looking at it. I mean, but here we go, risk reward. I mean, obviously, you don't want to pull the like Rick Rule likes to say, got a hunch, bet a bunch.
Yeah.
But I mean, if you're a speculator or something like that, I mean, these prices, has it ever been at this price? I mean, yeah, this is it's been a while since
It's the kind of thing that if the other project actually works out, I mean, a double, a triple, a four times is nothing, but they need to work through the old shareholders, the unhappy shareholders. I would expect a rollback. I don't know how many shares they have out, but it's probably too many at this point. And if they want to raise money, it's going to be problematic. So yeah, this may be good opportunity, or maybe they'll go bankrupt. Who knows? I hope not.
yeah, yeah, it's definitely risky, but I mean, yeah, I mean the reward could be significant, if it played out right.
Yeah, that's a lottery ticket. You don't bet the farm on this one.
Yeah, for sure, for sure. So I was, which a lot of times I don't really look at. I haven't been like, even with, like, we'll get to gold in a minute. I've been looking at the charts on gold. Like sometimes you just get to these uncharted territories, and and you're just like, what happens next? And so like we'll get to gold in a minute though. But yeah, so this was like what I was sharing earlier, with Cameco, and obviously you had the, I mean, it was selling off before the carry trade news. I mean, then when the carry trade news happened, I mean, it sold down here and then bounced back up. I mean, the stocks recovered really quick, but it's been selling off since July, after it reached this peak here. What was happening in uranium during that time? Was this just like a liquidation, and
So the whole space has kind of come to a strange place where there's barely any visible volume, right? You go to the spot market, it's like it's dusty shelves. and maybe a couple of guys behind a counter with not much to show for. And so there isn't much trading. The summer is very, very quiet usually. And I've actually been asked about, like Cameco and what's happening, why the price drop, etc. I don't know for a fact. I know what's happening in the uranium space with smaller investors throwing in the towel because they bought into the smaller companies on the premise, of the price going up and that following through. But the smaller companies, they have a blow off top that's usually much later than the likes of Cameco. And so they don't have the patience to see that cycle happen. And then for eventually the smaller companies to catch a bid and go really high price. And so there's that. With Cameco, my question is, who was buying and selling Cameco in order for it to go up in price in the first place? And my guess is the people who actually moving the needle weren't people like, you and I. I think it was more people that were behind big money, hedge funds and money managers. And then you have to understand that world in order to try to guess why they were selling off. Is it because they actually made a profit on the trade and they didn't elsewhere, so they had to liquidate so that they don't look so bad? They have to balance out the books so that the profits, they don't lose the profits when the price slide does happen? Or is it because of a fundamental factor that maybe they weren't comfortable with, that smaller investors would be comfortable with? There's nothing that I can think of in the story that will point to, okay, so this is why this is happening right now. There was a big, you know, piece of news that would have come out that would really have made a difference in the long-term story of Cameco. I don't believe so. And so I think this is more of a question of people taking profits, of hedge funds taking profits, shuffling money around, or maybe not being comfortable, with a level of risk for whatever reason. I do believe we're going to see a really good fall in the whole of the uranium space because of the price of uranium that's going to start to move, I think. And so my guess is today is the 21st of August. I don't know when this video comes out, but on, I think, the 5th, around the 5th of September, so very shortly, there's going to be the WNA symposium, which is, every year this happens in London. People come together to talk about the nuclear industry in general. And a lot of contracts are discussed during that period of time. So a lot of the activity that happens in the long-term market, we're going to get a feel for and get news of during that week, whenever, hopefully more utility buyers are coming to the table and saying, okay, we don't like these prices, but we don't have an option really. And so let's negotiate. And so I think that this drop was overblown, especially due to the size and importance of Cameco. And I think it's going to pick up, and it's probably going to blow through the old highs. But that along with the whole industry, because I think the price of the commodity itself is going to go up quite a bit.
Yeah. I mean, because it happened with everything. I mean, you can look at almost any chart, and you can see a big fall over that time. So there was, I know, like during the July, there was a big sell off. I mean, I know a lot of tech and risk assets got hit really hard later July. So yeah, and there was
the broad equity market sold off, and it seems like some of these companies sold off with them, and this is what can happen. So if hedge funds that hold tech stocks also hold Cameco and NextGen and whatnot, and say Denison, right? And then they sell off. What happens is you're looking at your uranium stocks and you see Cameco selling off, NextGen selling off, Denison selling off. You might just sell your uranium stocks thinking there's something wrong with uranium, but they're just being sold because now they're being held by generalists, right? And so this is the risk of selling on an impulse whenever things are going down, is that if you don't understand who's doing the buying or selling, then you're just shooting yourself in the foot and just making it hard, trying to get back in when the price is higher, et cetera, et cetera.
Yeah, for sure. So transitioning to gold. I actually did this right. I'm happy. I had a bull flag
You go.
right here, and it broke.
That looks
out.
beautiful.
I was like, yes. I was like, I actually marked it right. But yeah, so as we can see, gold shot up, and it was in this choppy pattern sideways, and then now it's broken above. Now we're just in uncharted territories because we've never seen gold at these prices, and so at least, I mean, obviously adjusted for inflation. I was looking at a chart earlier, gold adjusted for inflation, and that was it hasn't reached the 1970s, late 70s, early 1980.
Okay.
Gold was at about 2,600.
We're pretty close though.
Adjusted for inflation, and now we're currently we're close to it, but yeah, I mean it's still kind of off from it. Let me actually find this chart really quick because it's a good chart to look at. It's a gold adjusted for inflation chart. All right, here we go. This is it.
That would be cool to see. I haven't looked at the inflation adjusted price for gold. I do that to uranium every now and again, but not gold.
All right, so here's the inflation adjusted chart for gold, and we can see like over here in late
Mhm.
70s, early 80s, it was about 26.48. And then now we're almost getting to that level again, but this was in the 70s. So, I mean, even
Mhm.
if it was adjusted for inflation now, I mean, it should be a lot higher than this number in the 80s
Yeah,
because inflation
yeah.
was, I mean, inflation was high then, but the value of the dollar was a lot lower. I mean, it was a lot higher then as well.
So that's 2,600 and a bit. Interesting. Very interesting. We're close. Yeah, no, I saw a chart. I'm not gonna find it now, I bet, just because I jinx things a lot. But I saw a chart just recently where the the person had overlaid the price of gold and the miners on the same chart, and how much they went up by, went down by, etc., through time. I don't remember the time frame exactly, but there was just such a massive difference, because you see that historically what happens is the miners, like, they start going up, the price of gold, the price of miners, and the miners shoot up usually, and then collapse. Like they overshoot and then they come back down. And right now, what's happening is the price of gold is just inching up and up and up and up. And then the miners are flat to down. And so there's this massive disconnect that is probably it's it goes like this. It's either first time in history that we're going to have miners completely disconnected from the commodity itself, or we're just early in the game and then they're going to do what they always do, which is to shoot up and then overshoot, come back down. So this is why I like to invest in miners. My bet is that whatever has happened in the past will happen again. It's like the Bible says, there's nothing new under the sun, right? Things just keep repeating themselves. And so my bet is literally that if you look in the past, what's happened and why it's happened, if the why is still there, then it will continue to keep happening. This is why I'm very bullish on both gold stocks and silver stocks going forward.
Yeah, yeah. I mean, the equities themselves are, like I've struggled with the miners. I mean, which I've gotten. I have a few that I like, but I really started getting more into like the royalty streaming,
Oh yeah.
streaming companies, just because of their,
They're the
They're the
real
real
companies in
companies
this
in this
business.
business.
They're the real money makers. It's a really good way to play it.
So, so yeah, with the miners, I don't know. I've been kind of shaken out of there a few times. I mean, even let's look at. I'm just gonna pull up silver. So here's a chart on silver, and silver still. I mean, I keep hearing the case for, oh, it's gonna go a lot higher. Which I mean, when silver was down here, it was chopping sideways for a while. I had an interview and I said I was done with silver, and then silver shot up. I was like, oh, I missed it.
Maybe
Maybe
you
you
are the
are the
bellwether
bellwether.
there. Maybe
I've,
you're it.
I've been called the inverse Kramer effect or something, but I think everybody experiences this. But
Now, here's a list of things I want you to be bearish on, okay?
so yeah, some of the audience would get on. Oh, he's talking about gold, and that means we got to sell. And it's just like, well, gold's still going higher, so that doesn't make any sense. But so yeah, so silver, I mean, it hit 32. It's still struggling, to get back above 30, and gold is still just you know knocking these all time highs out the park.
Yeah, I was very surprised at gold. I've been surprised at gold for the last 2 years. I'm not gonna lie, because what's happening to gold now is, I think, somewhat similar to what's starting to happen with uranium, which is just the people who own it don't want to sell it. And then even if there's not a ton of volume, it just doesn't sell off, right? And so it trades sideways for longer than usual, and then you start scratching your head going, something's going on here. like, have we exhausted the sellers? Nobody wants to sell this. I don't know. Going forward, predicting demand for gold is extremely difficult. Supply is pretty much same as always, up and down 2-3% a year. It's almost not worth the work, doing it. But demand for gold has everything to do with a bunch of different macro investing geopolitical reasons, and so you almost need a crystal ball in order to try to figure out where gold is going demand side. But the thing is, as long as the chart is showing what it's showing now, which is just strength and people not willing to sell it, then it kind of becomes interesting, right? Because that's what makes a market. It's the supply and demand. And it seems like whoever wanted to sell gold, whoever wanted to get out of the trade. And I don't think it's by any means a crowded trade. Who owns gold? Who do you know that owns gold or think it's sexy? Like there's no hype, there's no groups around it that are really powerful to make anything happen. It's just a thing nobody really cares about. And so if it's a thing nobody cares about, sentiment is just blah. Miners aren't really making that much money. So where does it go from here? And then, as I was wondering, the price is starting to shoot up.
Mm-hmm. Yeah, there's just a lot of, I think there's a lot of, uh, there's a lot of tailwinds for gold. I mean, obviously, central bank buying, the national debts. The United States is at going on 36 trillion. Deficit spending. And there's just so many tailwinds, for having it. And it's really proven itself as a safe haven, like it's
Mhm,
always done. And so,
mhm.
I mean, I just don't see. I mean, obviously, you don't want to say an asset is going to go up forever, but I mean, gold is like one of those assets where it's just. I mean, it's one of the only. I guess I would probably say it's the only asset that, or form of money that's going to continue to go higher.
As long as we keep printing money and we like to print money. Now, I've been hearing, more economists saying that, it's likely that we're going to start an easing cycle soon enough that would make, would flood liquidity into the market, and then which that's obviously really good for gold. But that's the thing, because it's really hard to get the gold story right, then the gold miners kind of become difficult, I think, for big money and for generalists to come in, because it's one thing for you to go to a money manager and say you should own a tiny little bit of gold just for safety, just for geopolitical safety. That's not sexy, but it's probably a sellable idea. But to sell the idea that they need to go to, have gold miners, they have to look at it from financial perspective. And gold miners, you know, we joke saying, no, this is really good business. It's like a gold mine. Well, turns out that in the last, 20 years or so, at least 10, 15 years, owning a gold mine hasn't really been that profitable. Like the literal meaning of gold mine has kind of lost its own sense financially. And so we're kind of at a crossroads where either what it used to be, what it used to mean to have a gold mine, to be really valuable, to make a lot of profit, is gonna come back in vogue because gold is going to hold its price. Or we're gonna have a weird situation where, either the price of gold collapses, or, there's just no interest in miners and then you have to come up with a reason, because they've been burnt in the past, which can happen. But at the end of the day, it's just money rotation, and if it's the time for gold to shine, it's just a matter of time for the stocks to shine, is my opinion.
Yeah, yeah. So I want to show this. This is like another bullish indicator. Um, so this is the gold price overlaid over the Fed's balance sheet and
Uh-huh.
interest rates. And so, gold has been rising during interest rate rising, which is interesting. Yeah, because I've heard the opposite. I've heard that, oh, gold doesn't, gold falls with interest rates. I mean, I guess you can have some. It depends on time frames. I mean, I have
Mhm.
seen gold sell off when interest rates have risen, but it's not a trend that seems to last.
Yeah.
And so now, I mean, even 2007, they started cutting, and sure enough, gold starts rising. And gold starts rising, the Fed's balance sheet starts rising too. Then you see it level off, and then rates go up again. They start cutting, and then gold starts rising again. And then now you have rates up again. Gold's been rising during rates, and then
Mhm.
and then they're planning on cutting soon. So I'm like,
What
okay,
will
what will
that do
that
to
do
the
to the
price?
price? Yeah, yeah. So I'm like, we could probably see gold at like 3,000 or something. It's. I mean, if this chart has any weight behind it, and looking at this trend, obviously the trend only goes back to the year 2000, but I mean, it looks like every time the Fed cuts, that increases like the deficits, that increases the balance sheet, and gold goes higher.
Now at 3,000, how much money are we talking about from the royalty and streamers perspective? Like they are going to be printing cash. It's like they're gonna have so much money they're not even gonna know what to do with it. Like it's just going to be such an inflow that you don't necessarily need to go to the crazy little miners, the juniors, the small explorers, etc., in order to make good money, because there's just going to be so much money coming into this business in form of the streamers and royalty companies. So yeah, I mean, for some people, just keep it safe. Go to the people who are actually making money.
Yeah. Yeah, for sure. So I know last time you came on the show, you mentioned that you weren't buying uh, like physical silver. I think it was it physical silver? I think it was a while since you bought physical. Do you still
Yeah.
you're still not buying any physical?
I just hold on to my little coins. They're cute. I like them. Probably gift a couple to my baby. I just like the coins. I know I'm very unlikely to sell the coins. And so if I'm never going to sell them, why would I own them? Right. I hear a lot of people say, I'll never sell gold, I'll never sell silver, etc. Well, the whole point of them is either to make you money or serve as insurance. But if you can't cash out on your insurance, it's not really insurance. And so I think in where I'm living locally, if the what hits the fan and there's complete pandemonium and people need basic survival skills to live in that kind of crazy scenario, I know for a fact that the thing that will be worth more here where I live currently is not silver, it is not gold, it's probably a packet of cigarettes. It's maybe booze, it's something more practical, right? So yeah, I don't like, I hold them, but I much prefer to buy the stocks, even though they're crazier. I know that I'm gonna get in, and then eventually I'm gonna get out with the coins. I just know for a fact that I'm not gonna be in the business of, I guess, capitalizing on them. I think that's unlikely.
Mm-hmm. Yeah, I hold them mostly, I mean insurance, but mostly for like, if I ever needed to barter down the line or anything like that. Um, and it's just like universally, well, I can't say universally, but worldwide recognized, and so, and I've been buying, I still been buying, but I'm also like, I need to slow down again. I've been going through these spurts, where I buy, slow down.
I think if it makes sense for you to actually turn it into something else eventually, just keep buying it. Like, why not? I think it's a good habit. I mean, you could be spending the money elsewhere in not such a great way. I think it's a nice little habit to have. But yeah, I mean, some people around the world, like if they buy the coins, they'll literally have nowhere to go sell them. I've lived in a couple of places like that. It's like, what do you do with the silver coin? No, nobody even knows how much it's worth. So you have to, adjust to where you're living.
Yeah, I got a friend in Argentina, and they've experienced the hyperinflation and all of that, and I mentioned gold to her, and she said, "Oh, we wish we could afford gold," and I was just like, "Oh, yeah, that's that's a problem," So I think even using it as like insurance. Some people use it as savings. I kind of use it as a savings too. Like I used to just put money into precious metals just because like it was easier for me to it's harder to liquidate and easier for me to like stack. And so then when it got to the point where I needed to tap into the savings or whatnot, I could tap into them, or it's always like this off balance sheet kind of asset that if you ever need anything or you're in a crunch, like you can go sell some gold, you can go sell some silver. And so I've used it as that, and then obviously hedge against like global chaos and things of that nature.
Yeah, no, I would recommend that to probably 90+% of people. It's a good thing to do. But yeah, no, I'm not buying anymore. Like I was saying earlier, I never keep cash. And so if I do have cash, between buying coins, which I think are prettier than the stocks, obviously, or actually buying the stocks that I know have some chance of appreciating in price and triggering some sort of reason for me to sell them, turn that money into something else, or do it again, then I'm gonna take the stocks, most of the time.
Yeah, that makes total sense. Well, Fabi, that's a good spot to leave off on. We gave you a lot of content today. We went through charts, to talk uranium, talk gold, precious metals, and everything. Where can people find more about your work and if there's anything else you want to share with the audience, please do.
Sure. So people can find me at thenextbigrush.com. I run a daily not newsletter, a newsletter where I basically summarize what happened in mining today so that a small investor can make their decisions towards new companies that are popping up or old ones that are coming out with exciting news. It's completely free and you can sign onto it and then sign off whenever you want to, come and go. And yeah, that's where I'm found, thenextbigrush.com or the Next Big Rush on YouTube, on Next.com, or anywhere else. It's always the Next Big Rush.
Got it. You all don't miss the next big rush. We still just getting started. I feel like once the dust settles with this U.S. election and the reality sets in for what we need to transition energy and policy and all of that, I think we're gonna see an even bigger move in a lot of these commodities. So, and then really quick, I saw you posted a tweet about was it rare earths or lithium, or it was something of that nature. It was and you said they were super cheap, and so I was looking at it too. This is a little bonus insight. Okay, so I don't even know where to even start with that. So this is an ETF. I kind of just started poking around with. I'm gonna share screen really quick because I don't have the time to like really even research into that. But this is RIM-X ETF, strategic rare earths and strategic metals. And I know that there's if Trump wins, there's talk about tariffs, and a lot of these metals come out of China and such. And so and they're really, we haven't seen these levels since back 2020, 2021. Even 2019. So they seem pretty cheap.
Yeah, I like cheap. Now I have to figure out if there's a reason behind them being cheap right now, but it's looking good.
Yeah. I was just thinking in terms of like okay, I know we're gonna need this stuff. Like there's a lot of talk about onshoring and bringing jobs back and critical metals for militaries, and you're seeing like all this geopolitical stuff with countries and nations, and so I don't know. I mean, I have to do some more research into it, but I've been definitely dabbling at these levels here, just because I mean if this goes back up to $130, I'll be nice. I mean,
yeah, let's timestamp this for this to be the one thing that you really hit out of the park.
Yeah, I have to hold it though. I have to hold it.
I know.
Yeah. All right. Well, take care, and we'll touch base.
Thanks so much, Daryl. Take care.